We are live.
Welcome back. This is Stock Unlock Podcast, also known as Stock Talk episode 42, where your hosts Jake and Daniel talk live about recent earnings reports, stocks that we're watching in the market. And of course, we are two co-founders of Stock Unlock. We have been getting a lot of people asking us, when the heck do you guys go live? I can't follow it. We are sorry. It is incredibly hard to stick to a consistent schedule over the summer. The best way to find out when we are going live is to join our free Discord. If you don't know what Discord is, it's simpler than it sounds. It's just a chat server. So you will find that link in our description, and we will also be posting it in the chat. Speaking of the chat, good morning, Rajesh. Good morning, Daniel.
Good morning.
How are you doing?
I'm doing good. How are you doing?
I'm doing great. Airbnb reported earnings. We had all big tech report earnings this week. I know you have been hustling those videos out on your channel. I know I have been watching them. What's caught your eye this week? What are we going to be talking about today?
Well, Amazon reported its earnings this week, so that was the big one. I believe Apple reported its earnings as well. I have not gone through those, though, because I'm not an Apple shareholder. I do own Amazon stock, though, and I did do some moves in the portfolio this week.
Oh, okay.
Especially on Friday. Things got a little juicy on Friday, so we made some moves.
All right, yeah. Well, I think we're going to be talking about Fortinet a little bit later here, maybe some Amazon earnings, some talk about the cloud. I think a good warm-up here, Daniel and I were just talking 5 or 10 minutes before this, and honestly just naturally flowing the conversation into this live to hang out with all of you guys. It is much more fun the more people we have here. Starting off with Airbnb, I think makes sense. I have a classic Jake Ruth slideshow to go through there. Obviously, Daniel, keep me on topic here. I think maybe there's about 5 or 10 minutes of material, then I'll hand it back to you.
Sounds good. And everyone who plays the Jake and Daniel drinking game, take a drink. We're already there.
Get a very, very full cup for today's episode. Actually, I think EQB reported as well.
Oh, yeah, dude. I forgot that was this week. Equitable Bank reported as well. Dude, busy week.
Wow. You have been talking about EQB for a while. I just want to say congrats on that. Even though it's a short-term comment, it seems like that stock is following its fundamentals. And as you've been calling out, they seem to beat their guidance. The stock is going up, but we have to talk about one thing at a time. So let's warm up with Airbnb.
Okay.
This is a disclaimer. This is obviously not financial advice. I own the security. Daniel does not. This is just a light analysis of some of the things in their earnings reports. If we were to do a full deep dive, it would just be a full 2 hours. So again, this is just 5 to 10 minutes of some highlights. Daniel, if you're seeing some good comments come in, feel free to interrupt me because I can't see you anymore. But one thing we like to do on the show, and one of the reasons why we built Stock Unlock, is to help us all out with investing, making it easier, making tools more accessible for everyone. I want to plug AI tools. So Claude is a AI from Anthropic, and basically you can upload PDFs and things like that to the AI and ask it questions. So just wanted to do a call out that I have been saving some of my time, for example, uploading their 16-page earnings report and saying, hey, what page can I find their outlook on? And them just saving me a lot of time to search through. So I thought a really fun way to start off would actually be to look back at Airbnb's last report, which was Q1, and just see what they predicted. Something we talked about on the last show is it's always good to see what management of the company predicts for their revenue outlook and if they are meeting those predictions quarter over quarter. So they were predicting 2.35 billion to 2.45 billion in revenue, and that was from their last report. So how did they do? Let's ask Claude. So Claude saved me a lot of time here. I uploaded both of the reports. It looks like they beat their estimate. So they were actually above the high end. So they grew 18% year over year, which was 2 percentage points above the 16% they predicted. This is one of the reasons why some people would say they, quote, beat expectations. Just know it's relative to what the company is saying. But it got a smiley face from me. It's just nice to see them stick to and actually beat, just like we were talking about with EQB, of their management properly predicting their financials. Right. They're still very, very profitable. Daniel, I cannot stop talking about this. Their free cash flow margin is continuing to stay incredibly high. This is a very profitable company relative to the revenue they're bringing in on a cash flow basis. So that is great to see them continue. They are also very mindful of their share count, which I really like. Airbnb does use a decent amount of stock-based compensation, which is something to be aware of. However, they also authorize share buyback programs, which they have been executing on and fulfilling, and they are paying that with the free cash flow from the business, which as a shareholder, I really love. That tells me that the management gives a crap about the shares that I'm owning. So shout out to Brian Chesky there. You are the man. And this is just a visualization of their share count. Obviously, it bumps around with their stock-based compensation warrants, all that stuff, but nothing too crazy. I'm not getting diluted as a shareholder, for example. Great to see. And in May 2023, they announced another authorization to purchase $2.5 billion. So this is something it seems that they are continuing to do. A really quick update here on rooms, although I'm going to keep this one short because it can become a big topic. Their ADR, their average daily rate, which is the average price people are paying per month, they keep on forecasting that's actually going to slightly go down. And some people are saying that this is a bad thing. I disagree. They're actually purposefully introducing lower price rates as they look at to where the economy is going. And they're also trying to penetrate a younger consumer who is much more cost conscious on their spend. So you could almost view this as going back to Airbnb's original roots of what their core idea was as a small company, as well as what's happening with hostel stays and things like that. So as a shareholder, I am keeping tabs on this product to see how it does. I actually think this is going to help them out if or when we see an economic slowdown in the future, since people will be a lot more cost conscious. And they do highlight and make it clear that they have product offerings that are cheaper than your average hotel room. I understand not all consumers want that, but it's seemingly working for them so far. And I'll just flow into a little bit of the fundamental analysis on their balance sheet. I actually saw that their assets and their liabilities both went down, and I wanted to dig into this a little bit. So the reason why that is the funds receivable and the funds payable for their customers, meaning either customers owe them money or they owe their customers back money. Both of those numbers went down. So if you look at the ratio of their assets to liabilities, I think it's fine. And it was actually interesting to me to learn more about their balance sheet management, where they will have fluctuations depending on those values moving forward. And that is really what I saw driving the change in these. However, since the assets and liabilities moved in tandem together, it wasn't something that concerned me, just something I wanted to call out. Let's look at let's see, this is their income statement here. Nothing really too jumpy here, and I'm moving a little bit quick. I know we talk about Airbnb a lot, so no red flags. I just wanted to call out their product dev and sales spend went up a bit. However, they are becoming more profitable on an operating income basis. And as you can see, their share count is staying the same. So as a shareholder, this is good to me. They're growing. Their spend is growing modestly. Nothing that seems out of control. And they also, in the past, have cut marketing spending a lot. And the fact that they were able to keep their cash flow up, to me, shows a pretty strong moat. And lastly, we have the cash flow statement here. Their cash from operating activities was up largely because they are becoming more profitable. I do want to be fair. They, again, do a decent amount of stock-based compensation. This is something every investor should think about on their own and see if they're okay with that. For me, it gets a thumbs up, especially since they're also doing share buybacks to offset the dilution. I do know a little bit about the engineering culture, being an engineer myself at Airbnb, and I hear very good things. I think that AI, Copilot, things like that are going to farther increase their ability to output features. So it seems like they are using this as a tool to retain top tech talent in a very competitive industry. And they're holding a ton of cash. So they do have some small amount of debt going back from COVID on their balance sheet. However, the cash they hold is more enough to pay that off several times over. This is great to see. This cash is obviously coming from their free cash flow. It's not coming from debt or share dilution or anything like that. And that's just a super quick deep dive there. I'll go back to the chat.
All
You
right.
getting any comments here on this?
No, I mean, the fundamentals still look like they're pretty dang good. Looks like it was a solid report.
Is Willie right here? So we got a comment from Willie Daniel. Finally bought Airbnb. I think that's fake news.
That is fake news. I have
Fake
not.
news. It ran too much. I think the stock is more at a fair value if you're just looking at a free cash flow basis. I, of course, think the long-term prospects for this business are huge. So I'm very happy holding here, but it has definitely run a lot in a short period of time, which I'm not thrilled about, honestly, but
yeah,
it is nice to see the unrealized gain.
Yeah, no, they're killing it. They look like they're doing great.
Yeah. And thank you, Ashton. All right, Daniel, where are you going to lead us next year to the green stock pastures? I know we got Fortinet, EQB.
All right. Ashton says you killed it. Thank you so much, Jake, for that incredible analysis.
Appreciate it.
Also, everyone, sorry I'm looking down. My cat is begging me for pets. So we got Sal joining us from the stream today. All right. So I made an announcement on my Twitter back in like May, and I announced that I bought a small regional bank during the banking crisis that was going on in the US because banks were tanking all over the place. And I was like, like if every bank wants to tank, I did not mean for that to rhyme, but anyways, if every bank wants to tank, there's got to be some fundamentally sound banks in the banking industry that are being pushed down by the overall bearishness or pessimism. So I looked for opportunities. I bought this bank at a 5 price to earnings ratio. I thought that its fundamentals were great. And the entire investment thesis was I'm going to buy this bank because I think that it's just ridiculously cheap. It's staring at me in the face. And I am going to sell it when I believe that it gets closer to fair value. So it was always just like I'm not going to hold it forever. I'm just buying it because it's cheap. And I'm going to sell it when the market fixes that. The market fixed it. Okay. I sold the bank, got a 40% gain in a couple of months. Worked out great. And yeah, so I told everyone.
What the hell is the stock you're dangling in front of our face?
I told everyone that I would let you know what the bank is after the fact. That was the deal. And here it is. VBTX, Vertex Holdings Inc. And you can see that, look at this little bounce. But anyways, that was a 40% bounce. It looks small, but.
So you bought it where on that dip?
I bought it on May 4th right here at around, it was under $16. And then I realized the gains this week. So roughly 40% gain. So I told everyone
swing trader prunk.
So I told everyone that I would let them know why I bought this bank during the banking crisis and kind of what I was looking at. So I have a little folder here. Here we go. So this is the company's report at the time that I purchased the shares of the business. So right here we can see tangible book value per share was at $19.43. The stock was trading for about $16 roughly. So it was trading 10 to 20% below tangible book value per share, so well below book value. The diluted earnings per share in the most recent quarter were also 79 cents. They were up about 15% year over year, and the earnings were continuing to grow. So the bank was still growing. Everything looked like it was still growing. Tangible book value was still growing. It looked like a fine bank. Also, I should say that this bank is headquartered in Texas. It's a Texas regional bank, and Texas, I believe, is seeing large tailwinds. There's a lot of people moving over to Texas for the tax-friendly nature of that state. Like a lot of people are moving from California over to Texas, and the state's population is growing, which is a tailwind for this business. Continuing on, deposits. So the main thing that a lot of people were worried about during the banking sector crisis was deposits leaving the banks. So they put out this right here on April 17th. This was actually in the middle of, I believe, it was like mid-report. They put out this investor presentation to kind of like calm people down. And their deposits grew to 9.1 billion from 9 billion at the end of the first quarter. So their deposits were still increasing. So while everyone was worried about banks, deposits leaving and banks going under, they put out this report basically saying, no, our deposits are still going up. Like everything here is fine. So that was a major thing.
Please don't panic and cause a bank run.
Exactly. And then right here, they also said that their coverage ratio, so their liquidity ratio on top of all of their deposits was 149%. So they could easily handle, if there was a bank run, they were basically saying, yep, we got it. We're well covered and we're not going to go under, essentially. We have more than enough liquidity to cover everything. So I was like, that's sweet. And then lastly, their CET1 ratio was 9.32%. This is a bank liquidity ratio. Relative to Canadian banks, this is actually low. Equitable Banks, for example, is all the way up at 14%. TD's is at, I believe, 16 or 18% right now. But in terms of the US, this is a decently high CET1 ratio. And I don't love it, but it was okay for me. So basically what I saw, let me continue actually. Let's go over to the company's financials. If we look at revenue, in the first quarter, this was the most recent quarter when I purchased it. Revenue was at an all-time high and continuing to go up in the trailing 12 months. If we look at net income, it was also at an all-time high and continuing to go up. It went up again in the most recent quarter. And if we also take a look at insiders, let this load. Let's take a look at insider transactions. I am just going to focus on buys and sells. So this was the area right here where I was looking at when I purchased the bank. We can see that insiders were buying during the banking crisis in the first quarter, and they were buying a decent amount of shares, not like a crazy amount of shares, but $250,000 worth of shares. Insiders continuing to increase their position as the stock was falling. So I thought that it was, it was a good sign for me to see insiders buying as the stock was going down. So last thing, price to earnings ratio for this bank since it became a public company, average was 21. During the stock market crash of 2020, it got down to 6.4. That was the bottom during the stock market crash. And then during the banking sector scare, it got down to 5.4. So it was actually below the stock market crash of 2020. That's how much pessimism there was on this bank.
That's wild.
Yeah. So a 5.4 price to earnings ratio for a bank that I believed was still liquid. It wasn't in any risk of going under. It was growing its earnings. Its revenue was at an all-time high. Earnings were at an all-time high. Insiders were buying. And I believe that there was tailwinds behind the business with it being a Texas regional bank as well. So I was like, that's a really cheap price, in my opinion. I don't want to hold this stock forever. I don't think that it's an incredible business that I want to own for 10 years, but a 5 price to earnings ratio is a 20 earnings yield, which is pretty wild.
So say when there's blood in the streets.
Yeah. So I got it. Yep. So I got it and made about 40% on it. I don't hold it anymore. And that's that. It worked out.
I've got a follow-up. Congrats on that gain, by the way.
Thank you.
I have a follow-up question, and I may be speaking for other people who are watching here or who will be watching the recording. That was a really, really good explanation of you looking at that bank, seeing their fundamentals, the value it was trading at, and just coming to a reasonable conclusion that this asset on the market seemed very underpriced and was being priced as if it was in distress, and you determined this bank is not in distress.
Pretty much.
I am curious how you found that specific bank. So there are a ton of bank stocks out there. So when this whole banking crisis was going on, were you using the stock unlock screener and looking at banks? Were you screening on their price to earnings ratio? Because I would imagine you were looking at a ton of them, right? So fill in the first part of that story where I think we understand after you found it why it looked good. But how are you even searching for banks and these opportunities after you identified the macro picture there that banks were in distress and there might have been some good deals?
Yeah, I definitely used the stock unlock screener, and I was looking for banks. I believe it was under a $2 billion market cap that had good growth, good profitability, and price to earnings ratios below 7. That was basically the criteria. And then the screener gives you a bunch of outputs, and then you have to go and kind of do a little bit more digging on your own. Go through investor presentations, et cetera, et cetera. I did also have a head start, though. I don't know if you remember this, Jake, but VBTX was a stock that I discussed in one of our Stock Unlock subscriber-only newsletters.
It looked really familiar, and I was trying to remember where it was from. I actually thought that we had talked about this stock in real life when I was in Canada.
No, I discussed it in a Stock Unlock newsletter. It was one of the first ones we ever did, the subscribers-only newsletters. And I did all the research on it. I thought that it looked compelling. I never ended up buying it. And then when I saw the stock drop like that, I redid all of my analysis after also finding it in the screener again. And I was like, I remember this one being pretty nice. And now it's like 50% off. So I'm going to take another look.
Well, speaking of the screener, shameless plug, we built this because we found that it was really hard to find stocks of good value or have screeners that were a bit unique and just not giving you the real generic filtering things that you could find on any free screener today. So we have the link up here, and we have heard from our subscribers and users that they have found some pretty great stocks with this screener that actually have become some of their favorite investments. Check it out. Head over to stockunlock.com. It is one of the many tools we have there. And of course, we're two of the co-founders of Stock Unlock. So really appreciate all the support.
Yeah. Okay.
I'll do one side topic question here and let you maybe prepare for EQB or Amazon. Captain Strange here, good to see you again. What programming languages did you use to make Stock Unlock? So I'll keep this short to not lose people to get too tech heavy here. The front end of Stock Unlock is using React.js. It is a single page application, and we ship a huge JavaScript bundle to the front end. We use a couple other libraries to help us render components and graphs and things like that. The back end is all serverless in AWS. And if you are an engineer, and this is piquing your interest, if you want to work at a very, very cool young startup and work alongside Daniel and I, we are looking for and actively talking to senior engineers and taking interview candidates. We are looking to grow our team. So shameless plug there. If you want to learn more about that, you can just reach out to either of us on email, support@StockUnlock, Jake or Daniel at StockUnlock, or just hop in our Discord. We'd love to talk to you if you have interest, or if you have a friend that might be interested, let us know. Back to you, Daniel. A little tech segment is over now.
Yeah, so we're getting a couple questions about Equitable Bank because they reported. I'm going to do a video on this. I actually have the video recorded. I just need to edit it and post it, which I will probably do tomorrow. So I will go into the earnings very in depth on my YouTube channel tomorrow. Watch out for that video. Overall, though, the company freaking killed it. They beat their own expectations. They raised their guidance. They're now projecting 18 to 22% earnings growth this year. And honestly, every metric, they're projecting almost every metric to grow more than their original expectations. The dividend is up 25% per year. They're still expecting to grow it by 25% per year for the next 5 years. It was just a fantastic report, in my opinion.
And this is a stock you own and hold for long term, if I remember correctly. Yep. When did you first find this stock again? Just to remind some of the newer viewers here, because I've heard you talking about this one for a while now. And it seems like the thesis is really playing out well.
Yeah, so I actually purchased my first share around $71 back here in early 2021. And then this happened. Let me zoom in. I purchased my shares. I was like, oh yeah, I think that it's a good value. And then it fell off a cliff down to $53 a share. And I just dollar cost averaged the entire way. I was buying here. It fell all the way down, 34% decline to $46 a share. And I was continuing to buy in here. I believe I actually made a YouTube video when the stock was down in this range. And I was like, okay, this is in my opinion, a very, very cheap stock. So I made the video down here and I was continuing to buy it. And now the stock is at an all-time high, brand new all-time high.
Are you still buying it? Or was there a period when it started going back up and you got comfortable with your position size?
I am comfortable with my position size. It's very large.
So, are you talking double-digit percentages here? I mean, how to...
Oh, dude, we're in double-digit percentages for sure.
Let's go.
Yeah, so I actually have this comment. I'm going to go a little bit off track here, but Shane Bubb says, is the YouTube portfolio that I follow on my channel the same as my personal? I will say that every stock that I own in the YouTube portfolio, I own in my personal accounts. The values are slightly different. The reason I made the YouTube portfolio was because I don't want people to track my net worth and know exactly how much. It's just too much information out in the universe. It makes me uncomfortable. So that's why I made the YouTube portfolio, to replicate the personal portfolio. However, I will say that Equitable Bank in my personal portfolio is actually larger than the YouTube portfolio, and so is Brookfield.
Well, what's great is in Stock Unlock, you can combine those portfolios.
Yeah.
More shameless plugs. We have had so many requests almost begging us, Jake and Daniel, please add brokerage account linking. Manually creating my portfolio is so painful. That is dropping tomorrow. The date is official. It is going live. Keep an eye out for that communication. We are going to support dozens and dozens of brokerages. And on the off chance that yours is not supported, we have a lot more support coming up throughout the end of the year. It's going to be incredibly exciting in just a few clicks and then no other work from you. Your portfolio can be fully modeled in Stock Unlock. And if that's not something you don't like, totally cool. You will still be able to manually upload and use the CSV upload existing features.
Yep.
I cannot wait. I've been on the coding side for that, Daniel, and it has been incredibly fun.
Yeah, I can imagine you. Dude, I'm so stoked for this. Unfortunately, I'm with TD Bank, so I have to wait a little bit longer because we don't have them yet. But
it's coming. It's coming. Well, just to be very clear, TD for America is going to be available. I have a brokerage at TD, so specifically TD Canada is something we will be supporting later this year. So a little patience if that's who you are with, but no fear. We are aware and it's coming up.
Okay, I have some screenshots here. So Equitable Bank has outperformed for shareholders and its customers. It has the best 10-year total shareholder return of any TSX or S&P 500 listed bank. Over the past 10 years, it has compounded at 16.3% now. So it is absolutely killing it. The bank is doing great. This one right here also says EQB reports its best ever quarterly earnings per share, raises its guidance, and increases the dividend to 23% year over year. EPS guidance is now 18 to 22%. Previously, it was 10 to 15%. So they raised it by 8 and 7%. And yeah, ROE 18.3% above their expectations. Net income was up 88% year over year. Just a ridiculous quarter. Like,
I like how like everything is just underlined. You're like, it's all good.
like it was honestly just a ridiculous quarter. And it goes on. Adjusted Q2 net revenue plus 72%, net interest income plus 50%.
What?
Q2 non-interest revenue was up actually 100% year over year. Customers grew 31% year over year. They had a record quarter for customer signups. Portfolio mortgages up 29% year over year. Reverse mortgages up 143%. Insurance lending up 57%. It was ridiculous, man.
Was there anything in the report you did not like? Like, if I had to push you and say, is there anything they're reporting that you wish was better or that you aren't crazy about, whether that's management or competitors coming in with competing projects? Or was it just all sunshine and rainbows?
The only thing that I was kind of iffy on was their deposits were only up 1% quarter over quarter. But when you dive into it on the transcript and everything, they're basically saying that's kind of by design. Like, they said that they can get way more deposits at any point. That's the way that they're putting it. They're just like, we don't need them right now, so we're not going after deposits. So that was the one thing, is like, personally, I would like to see deposits up, because if your customers are up 31% year over year, but your deposits are only up 9%, to me, that was like, But then they explained it in the call, and they were just like, yeah, it's just something we're not really gunning for right now. We don't need it. But other than that, literally everything, I was like, that is an incredible report, man.
Wow.
And the stock, that's why it's back up to all-time highs now. It's officially at an all-time high.
Well, congratulations on that one. Sir Daniel Pronk, nickname Banks over here.
Yep.
How many bank stocks do you own, or is that an undisclosed number?
I
guess
believe
it went down by one recently.
Yeah, it's down by one now, but I believe last time we counted, just off my memory, I think it was like 7. So,
well, I'm not sure if anyone else. That's crazy. I'm not sure if anyone else feels the same way as me. Banks are cool, but they're not super cool. So let's talk about something that is super cool. Fortinet. This stock tanked on earnings. It was down 25%. We are getting a lot of questions about this in our Discord.
Yep.
Fortinet is a company that provides cybersecurity solutions. Full disclosure, I personally have not looked at this company a ton, but the good news is I think someone else on this call has. So, Daniel, are the rumors true? Someone said you bought this stock. Someone said you didn't. What's going on? What's up with this stock? What are your opinions on it? Are you a shareholder? Walk us through what causes a stock to have a monster fall like this on earnings.
Yeah, so the stock fell because they lowered their guidance for the year. And that's basically why. So I believe they were projecting something like 30-ish% revenue growth. I'm going off memory right now. But they came in and said, no, we're going to grow revenue by 22% now. Which on its own, think about that. A company growing revenue by 22% is still pretty dang good revenue growth.
Well,
so yeah, the stock just fell. I think the market was pricing in, I guess, more expectations, and then they lowered their expectations, and people, in my opinion, kind of panicked. So yeah, I added it to the YouTube portfolio.
Interesting. Yeah, I'm not sharing my screen anymore, but I'm looking at their, I'll share my screen again because I'm looking at their revenue line in Stock Unlock and toggling the growth rate.
Yes.
Just to kind of visualize what we're talking about here. When you're saying 22%, is that a year over year number?
Yep.
Okay.
So they're expecting 2023 numbers to be 22% above 2022.
Yeah. So these are the yearly reports. So this actually lags their quarterly since this one just gets reported once per year, but you could see their growth rate on this green line here. Then in Stock Unlock, you could always toggle at the top. This is us looking at their revenue growth over time. I was also looking at the TTM. There's a lot more to look at for a company than revenue, as we always talk about.
Yep.
But this is very consistent revenue growth. I rarely honestly see the percent change quarter over quarter stay this consistent. And dare I say, it actually looks like it's been trending up. So
yeah, so
I agree with what you're saying here, Daniel, that this might be an overreaction.
Yeah, so their revenue really exploded during COVID over the past couple of years. It was an unusually high amount of revenue growth that they saw. So now they're basically saying things are starting to normalize. and we're expecting 22% growth this year now, which I thought was still great. So the market sold off the stock. This is actually another stock that I wrote about in one of our subscribers only newsletters.
There you go.
So that's why it was on my watch list. I did all the research for the stock. I shared it in the newsletter. I said at the time that I wrote the newsletter, I believe the stock was expensive though. So I put it on the watch list. I said it was a stock I believe, you can add to your watch list. Then earnings came out. They lowered their guidance slightly. Market sells it off 25%. And I was like, okay, interesting. Brushed up on my research. Found out that the stock, after its drop, was trading for a price to free cash flow of 22. Its historical average is 27. And think about this in a vacuum. How much would you, or I guess I should word it this way. Do you think that paying a 22 price to free cash flow would be fair for a business growing at 22% per year?
Sorry, is that growth to their free cash flow numbers or their revenue? I guess it would depend what their cash conversion is. Like,
yeah, their cash conversion, their free cash flow. Well, their free cash flow grew by 70% year over year, but it's, yes. So basically, let's assume the free cash flow will follow the revenue going forward. So yes, for 22% free cash flow growth for a 22 price to free cash flow. Do you think that's a good price?
It seems fair.
Okay. I think it's a good price.
You think it's a good price?
Because
here's my thing with this company, Daniel. Can you walk me through how you understood this business? Because I have not taken a deep look into this, but I'd imagine that customer retention here is very big, understanding who their customers are. I just know that there's a handful of companies that are selling cybersecurity solutions, and it could be a pretty vague term, especially for those unfamiliar with the industry. So what was your mindset in like assessing their moat and management, or is this more of a purely fundamental based play, like trusting management and looking at their retention and growth numbers year over year?
Yeah, so I would say that this one is more a fundamentals play. I understand they're in the cybersecurity space. They have a few different products. Their main one, I believe, is their firewall security. And they have an over 50% market share, and the market share in their industry is growing.
Wow.
So I don't, I don't know for sure how strong the moat is, but the numbers and the metrics tell me that they do have a moat, maintaining over 50% market share and growing market share, and their margins are expanding, which is another sign of a company having a moat. And then also the insider ownership. The two largest insiders, one is the founder CEO, the other is the CTO, and they own 20% of the company. And one of the things that I said I liked about this stock is because when you see these tech companies growing at 20% plus per year in these very exciting industries, typically what you see is very high stock-based compensation going on. This company does not do high stock-based compensation. And I believe the reason for that is because the founder and the CTO own 20% of the shares.
Are they brothers? Sorry for interrupting. Are they brothers?
I don't know. But so if they're going to do stock-based compensation, which dilutes shareholders, they would be the ones the most heavily diluted because they own 20% of the company. So I believe that there is a strong focus on protecting shareholder value in this business. And they've been protecting shareholder value quite well. They actually buy back shares. And they actually only buy back shares when they believe the stock is cheap too, which is something I don't see a lot in the tech industry. So if you look at the timing of their share buybacks versus the stock price, they typically only buy back shares when the stock is down. And then when the stock goes up, they do not buy back shares. They stop it.
Yeah, like this was the COVID one right here.
Yeah.
Okay.
Yeah, so I think that they're very good at protecting shareholder value. They're growing strong. They're very profitable. Everything's still growing, and I thought that the price was good. So
yeah,
I took a position.
I'm really curious if these people are brothers now, but maybe that's just my own curiosity. If someone knows in the chat,
someone said they are in fact brothers, Jake.
Okay, that's it. Very interesting. Family-run business. It does look like they did have some sales here, though. So it looks like they both did around $500,000 sale, but it was a small percentage. Yeah. Airbnb has also been selling too, and like this is something I've been thinking deeply about. I'd be curious to get your opinion on this, Daniel. We do demonize insider selling a bit. However, I do think sometimes it is expected, and also depending on how long someone's been with the company for, there is a good amount or an acceptable amount of selling. So I'll go on a limb here and say my opinion is, even though they're selling, this doesn't look terrible to me. They're selling small amounts. This is also part of their compensation package. So I'm curious if you agree with that or not.
This is something that Peter Lynch actually talks about too. He says there's one reason to buy, but there could be a million reasons to sell. And the only time I get concerned about selling is if it looks like the insiders are selling off as many shares as they possibly can as quickly as they can. But if you take a look here, you can see that Z Michael or Michael Z, they got 11,675 options granted to them, it looks like. And then you can see that those are the shares that they sold. So it looks like they got that option package and then they sold it off, but they still owned their initial 9% stake in the company. So this is just one way that they seem like they're, increasing their cash flow beyond their salaries, which I think is fair. I mean, look, it's 0.02% of the position. They're not selling, 50%, 100% of their position consistently. It looks like they're just selling to increase income, which I mean, I'm fine with that.
Yeah. I wonder if we have their compensation information here. Oh, they're making a pretty penny if this is right.
Yeah, that's not a bad salary.
14 mil a year. Yo.
Yeah, that
sounds pretty nice.
I take that. Why not?
14 mil a year, selling millions of dollars of stock. But hey, it looks like from what you're saying, they're growing. It looks like they're honest with shareholders. You said that they're managing their share count well. So these vehicles exist in capitalism for people to create a lot of value and then reap the benefits of those rewards. So yeah, they keep on executing here. My one thing, Daniel, is I want to, more on the tech side, just really dive deep on this industry. I want to get well acquainted with who their competitors are and how moats could be understood, because that's been my apprehension for me personally touching these stocks. And it's more from my lack of time to look into it, just spending too much time coding on stock and lock, in all honesty, working on the tool that I should be using to invest, but I'm spending all my time building it, not enough time using it. But that is my own problem.
Yeah. Sell by the Bell says, oddly, a lot of tech companies buy at high prices, which undercut shareholders. Yeah, I agree. There's a study on this that typically when companies buy back shares, they do so at high prices when it actually is not the best idea to buy back shares. You want to be buying back shares when the stock is cheap and when, you're actually getting a good deal on the shares. So that's what Fortinet does. And that's actually, if you read the book The Outsiders, which is a fantastic book about how to properly manage capital, it's a book that basically shows 8 of the best CEOs that outperformed the industries that they were in. Every single one of them would only buy back shares when they believed that their stocks were cheap. And that's one of the best ways to create shareholder value. So it's something that I like to see, is a company logically buying back shares at good times.
Makes sense. I'll do a little bit of a topic change here. Oh, whoops, I put up the wrong comment. Can we expect the newsletter to continue? So, Daniel, I'm going to share my screen quickly just to show we do communicate about this and we do owe you guys an answer. So please be a little bit patient as I bring this up. If you guys are not yet in our Discord, it is obviously optional, but it's totally free. We probably got around 30 people that responded to this note, and I will paraphrase it. We usually do monthly newsletters. There's been a lot of one-time events in the business that put a lot of stress on Daniel and I, to be completely honest. And it is true. We did not have time to send it this month. It's actually something we are actively diving deep on with our own resources and seeing what is the best way to do this newsletter moving forward in a way that is sustainable and continues to give a lot of value to you all. So I'm going to share the link again for this Discord. We would love to see you guys in there. And this is a really great place to carry real-time conversations. Daniel and I hang out in here. And I'll pass it over to you, Daniel. What are our current thoughts on this? Is it still kind of in flux? Did I bring this up too early and I shouldn't be talking about this yet?
No, the feedback we got basically was we should continue the newsletters. People love them. I think they will just have to transform in the future, because historically the subscribers only newsletters were me finding stocks that I believed looked interesting and had very strong fundamentals that people should know about or whatever. But the reality is, diving that deep on a business and then writing a 1,500 word report on the business takes a lot of hours. Like, it's not easy. It's probably 10 to 12 hours of work from start to finish to find the stock, research it, compare it to competitors, understand it, like get screenshots from the presentation. It's a lot of work. So yeah, we had some stuff come up in the past month that caused Jake and I to take on a lot more work. Do people know what happened? I think we made it public what happened.
Let's maybe bite our tongue for the end of the stream for that. I think something we've done a few times is at the end of the stream, the last 10 minutes or so, we'll have more of like a casual chat about the business. So to avoid us from going too off the rails, maybe we'll put a bookmark in that one. And I just want to
anyways. Okay.
Sure.
Yeah. So I just didn't get time to write it this month. Is what happened. But next month, it should come out. So yeah. Continuing on. Grape Jelly says Fortinet management acknowledged the incoming economic slowdown, which is a big no-no for Wall Street. They want to spam me with AI that the economy is sound and resilient. So Fortinet was honest, it sounds like, and then the stock fell because of it. Cool.
The truth hurts.
Ian Cubes says, hey, Daniel and Jake, have you heard of ROP? They're similar to CSU, but based in the States. I actually have heard of ROP. They're a serial acquirer of software businesses. Basically take Constellation Software and put it down in the US. And you have ROP. I don't own this business. I do own Constellation Software shares. I'm a Canadian. I love CSU. Historically, they've done a better job. And I think they probably will in the future. So I think CSU is just higher quality. And it trades in Canadian dollars, which is great for me. Martin Transport. Okay. Jake, do you want to look up MTRN?
Sure. This is a new one for me.
Okay, I'm going to continue answering the questions here while you pull that up. Christian says, hey, Daniel, quick feedback on your meta video. Meta guided for 20% revenue growth, not 3%. I believe you confused in your meta video. Yes, I did. I misread the numbers. I made that video very quick, which was my fault, and I misread the numbers. They were projecting 20% year-over-year revenue growth, which is much better than 3%. So, yeah, good call out. Sell by the Bell says due diligence for an email blurb is way too much. Thank you. Yeah, it was a lot of work. It's like a solid day or two of work full time. So yeah, great content as always. Wish you all the best at what you do. Thank you, Hector. And Jake, how's it looking over there?
Well, I have absolutely no idea what this company does, but the word Delirium looks really fun. They've been public since 1980. It's a metals and mining company. They employ 3,723 full-time employees in Ohio. Traditionally, this stock has beaten the SPY the farther back you go in time, I guess with a few exceptions here, but that is nice to see. They are trading just over $2 billion on their market cap, and they do pay a pretty small dividend. The dividend seems very well maintained by their free cash flow, which is great to see. And the yields are okay. 3.74%. I have not checked what the 10-year is at, just to do a little gut check on margin of safety here, related to what a bond can turn cash flow wise. Let's check out some of their financials. And feel free to guide me here, Daniel. Okay. So this is always interesting to see when you look back in a company's history, just see how they've been able to grow historically. So one thing that's really interesting to me here is their stock has compounded a lot over time. But if you look back to 2011, even though the stock is less than half of where it is now, maybe even a third, it looks like the revenue is about the same. So I'm wondering if this company has been buying back lots of shares and maybe the per share values are going up.
Yeah, I'll take a look.
Let me know what you're thinking here, Daniel. Okay,
look at the cash flow numbers.
Yeah, this is when I want to also open the stock in the freeform tool and just see what their historical ratios have been. Like maybe the stock was actually trading extremely cheap and it's come up more to close to fair value.
I can see that their operating cash flow is spiking.
Yeah. Remind me, Daniel, when this is positive, they're taking out or paying back? I always flip those in my head.
When that's positive, they're taking on debt.
Interesting. Okay.
Yeah, you can see their operating cash flow is at an all-time high.
Yes. So I would definitely want to figure out why this is. I'm not sure if we're going to have the time here, but I would definitely search through their reports to try to understand what's causing that operating cash flow bump and if that's something that's expected to continue. And they were taking out debt too, so it'll be interesting to see how their balance sheet's doing. Ooh, okay. Wow. Okay. They recently took out a lot of debt. Very interesting. We'll look at their cash position too. And their cash position is not that high. Yeah, I'm not completely loving what I'm seeing here just based on the fundamentals. It looks like the stock price has risen a lot, but I would want to get more confidence as an investor. Is their operating cash flow going to continue to grow? And just why the stock price has run so much relative to what it used to be trading at.
This is a metals and mining company, so it probably makes money off of some sort of commodity price.
Yeah.
So that's probably why whatever whatever commodity they sell was probably up, which increased their margins.
Yeah. It seems like an interesting one. Nothing's jumping off the page here to me, but I'm curious. For the person that asked, are they investing in this stock? What are they seeing that's bullish or bearish? Let us know if you think we're missing anything here. I'm not sure how much I had to check out here, Daniel. I don't have my eyes on the chat.
I'll continue on. Okay. We have a question here. Thoughts on Telus from Patrick. This is one of the largest telecommunication companies in Canada. This stock, I believe, has been getting beaten up quite a bit. Let me take a look at it now.
If I remember correctly, this is a stock that you owned and sold at around like 30?
At 34. Like right up here, right near the peak. I lucked out and I sold it up there. It has now come all the way down to $23. The dividend yield is 6.3%. So yeah, I mean it's really come down, but the company is projecting its cash flow and everything. So previously, I believe they announced 2.5 billion in cash flow for the next year, free cash flow, and they just dropped that down to 1.5 billion. Let me see if their most recent financials are here. Okay, unfortunately, we do not have their most recent financials that they just reported. Yeah, okay. But yeah, I basically, what was my conclusion on this one? Let's just take a look at their cash flow statement. So they generated $4.4 billion in operating cash flow in the trailing 12 months. They used 4.1 billion in capex, which means that they have $300 million of free cash flow left, something like that, 274 million left. Then you can see that they paid $1.2 billion of dividends. So if they have $274 million of free cash flow, how are they paying a $1.2 billion dividend? Well, the answer is they take on debt. So you can see here that the company, whenever they're in their capex cycles and they're increasing their capital expenditures to grow the business, they like to take on quite a significant amount of debt. 3 billion here, 2.4 billion there, 2.2 billion there. So my conclusion was basically when the company is in its higher capital expenditure cycle and it's investing in the business, I thought that they should just lower or cut the dividend rather than maintain it and leverage up the balance sheet. Because on top of them just paying the dividend, they were growing it as well. Let me see if I can find that. Yes. So they like to grow their dividend too. But they're paying this dividend over the past couple of years. They were paying this dividend with debt. So I think that I just don't love it. I understand that, it's a high capex business. It's kind of like a utility, but I just don't love it.
I hate that.
Yeah. Like they're going to grow their dividend with debt as they're investing in their business and leveraging up the balance sheet. And now they're projecting less free cash flow over the next year. So I kind of was just like, yeah.
Dan, do you want to laugh at us for a second here?
Sure.
The last stock we did, apparently the person, no ledge is real, came back and was like, whoops, I wrote the wrong ticker.
Yeah, there you go.
Sorry.
You can also see here the company's tangible book value has been declining and it's negative $12 billion now. That's because the company's taking on a lot of debt. Basically, at some point, I just think that this is going to have to stop. I don't think that they can just take on debt forever, and eventually the dividend will have to grow with organic cash flow. And I just don't know when that time is going to come. So there's just some things I don't love. I think that there's just better businesses out there.
Well, it seems like management is almost trying to keep the stock price propped up. A lot of investors will sell if they hear that the dividend's getting cut.
Exactly.
So the incentives are all a little messed up.
If you read my Twitter analysis that I did on Telus, I basically said I think the management is focusing on keeping the share price up rather than doing what's best for the business. Because doing what's best for the business would be, hey, we're entering a high capex cycle. We're going to cut the dividend so that we can keep the balance sheet healthy and pay for this organically. But no, they don't do that. They take on tens of billions of dollars in debt over the course of 5 years. So,
yeah, it's a no for me, Doug.
Yeah. Fair enough.
It doesn't make sense to me. So I got handed AT&T stock from my father, which had been owned for a while, and AT&T was a dividend aristocrat stock. Right before COVID in 2020, I actually sold off the entire position, which was pretty sizable when it got handed to me. And there were very similar things going on. I couldn't directly prove that they were taking out debt only to pay off the dividend, but their debt load was almost the size of their entire market cap. They had aging assets. The management had not made good acquisitions. And when you look at the exact same things you were just looking at there, Daniel, what is their free cash flow? What is the dividend payment? And very simple elementary math of can they afford this? I came to the conclusion where I said, I don't know how they can, one, continue to pay the dividend as it is now, or two, continue to even grow the dividend when they're in that situation. And evidently they did end up cutting it around a year or so later. So these are things that you should definitely be looking into for dividend paying stocks. And thank you, Hector Garcia, for this great comment. Great content, guys. Wish you all the best. Thank you. Thanks for being here. It's way more fun when there's people to hang out with live. So appreciate you coming by.
I have a quick comment here that I can answer. This is BIPC versus BN.
Take a drink.
Nathan. Take a drink. Okay. So let me... Oh, this is versus BN, actually. Am I still showing my screen?
Oh, so I rudely removed it from the stream once it went to the infinite view. Yeah.
Okay. So let's go to BIP. I actually thought that this was BIP versus BAM, so that's my bad. BIP is Brookfield's infrastructure division, pays a 5% dividend, and the company is focused on paying a higher dividend and returning the cash to shareholders that way, whereas BN is a lower dividend paying company. Dividend yield's not even 1% right now, and the company is more focused on keeping the money within itself, investing it, and then also buying back shares at opportunistic times when they believe the stock is undervalued. So for me, I like BN because I think that it will provide more growth, and that's kind of my goal as an investor. And then BIP is more of a dividend play. Now, I did used to own BIP for its dividend. However, when Brookfield spun off its asset manager, BAM, the dividend down here, when it first spun off, when the stock tanked, and I was buying as many shares as I possibly could right here, the dividend yield was, I believe it was on par or actually above Brookfield infrastructure stock. And BAM has a cleaner balance sheet and is projecting more growth. So basically, it was a higher dividend yield, more projected dividend growth, and a cleaner balance sheet on BAM. So I don't own BIP anymore.
Sounds like a logical thought process to me.
Yeah, I swapped it. So I got asked this recently a few times, so that's why I should take that comment. But yeah, I don't own BIP anymore. Also, Knowledge says Martin Transport Trucking Company. I got you. Okay, we'll take a quick look.
I'll let you do it this time.
Yeah, I will do it this time. MRTN.
We did look at a random metals and mining company before, though, so yes, that was a loop. This is what happens when you do the show live, and if you are watching the recording on Spotify or YouTube, come hang out with us live sometime. We really appreciate hanging out. Anyways, we got the right one up here.
Okay, this is a trucking company, $2 billion market cap. It's been doing great. It was a dollar stock back in 2000. It's up 2,000%, probably beating, it's going to be beating the SPY by a lot then. Pays a dividend of 1.04%. Immediately, I'm seeing a 95 price to free cash flow, which is a 1% free cash flow yield, which I don't love. If we take a look at the financials, though, income statement, the revenue has, let's do TTM. The revenue has really taken off.
Hit the end of the year-to-date slider at the end there.
Yeah. Oh, yeah. Okay. Oh, crap. Oops.
That's a software thing I'm fixing this week. Sorry about that.
Okay, so we can see that back here in 2008, the revenue dropped by about 20%. So it looks like this company does well when the economy is expanding, but then when you go into a recession, revenue looks like it starts to come down. It looks like the revenue has started coming down recently. I also know that there was like a trucking boom during COVID when there was like those shipping backlogs. Truckers were making a lot of money, so were shipping companies. That's probably why they saw this spike. Cash flow. Looks like operating cash flow is starting to top out. Is this right? Wait, this is stock-based compensation. I was like, there's no way that's cash flow. Okay. Cash flow is at an all-time high. Sorry. $230 million in operating cash flow. What is their free cash flow then? Only 19 million. So this is interesting. They actually like lost money for all of 2012 to 2018. So for 6 years, they were free cash flow negative, and they're not producing that much free cash flow right now.
Yeah. I wonder if they have a lot of debt, maybe.
Their debt repayments are very low. We'll take a look at that. But their dividends paid, they paid dividends. Their capital expenditures are just quite high. So they must invest all of their operating cash flow into growth. And apparently the market likes this because their stock continues going up. So I would imagine this company follows its operating cash flow.
Well, so it might be growth. Could it also be the service costs of maintaining the trucking fleet?
It could be. Yeah, it definitely could be. They have $80 million in cash, 264 million of liabilities. They have no long-term debt. That's very good. And their tangible book value consistently is growing, and it's at an all-time high of 740 million.
So where was their cash coming from then if they were doing negative cash flow for a decade? I mean, it had to be coming from somewhere. What? Maybe share dilution?
No, they actually buy back shares.
Huh. I'm confused.
Yeah, I'm a little bit confused too. That's a good question. Where does their cash come from then? Anyways,
For whoever brought up this stock in the chat, let us know what you saw here. Do you think we're missing anything? This is definitely an interesting one.
So the executive chairman of the board also owns 22% of the company. Another person right here owns 6%. So yes, there's high insider ownership on this business as well. Honestly, like they're continuing to grow their operating cash flow. I would want to know, as you said, Jake, I would want to try and figure out how much of their capital expenditures is maintenance capex to sustain the business versus investing in growth. But yes, their operating cash flow is growing nicely. Let's take a look at their price to operating cash flow.
So I do know one big trucking company in the United States just went under. The name's leaving me right now. So I am wondering if people are also seeing this company potentially taking more market share as one of their major competitors went down. I'm just unfortunately not very prepared to speak more about that. But it was a news headline I saw this week.
Yeah. Okay, so I just looked at their price to operating income, price to EBITDA, and price to operating cash flow. And on every single one of those metrics, it is on the higher end. So it doesn't look like it's necessarily cheap right now relative to its historical averages. But I mean, I'm actually kind of intrigued. I am intrigued. I would almost put this on my research list because they're doing something clearly. Like they're clearly doing something that the market likes. There's high insider ownership, and who knows, man? They could just be acquiring new businesses and expanding very well and just continuing to grow over time.
One thing I do like about this business as being a research candidate is it seems graspable to understand.
Yes.
Following Peter Lynch, invest in companies that you could explain to a 5-year-old. Typically, a trucking company is something most people could wrap their heads around, what their business is and all that. So it does look very approachable to me too. We do have a share research channel in our Stock Unlock Discord, so we've been having people share some of their research and stuff there. Maybe we'll see some of those papers drop in the next week or two on this stock.
Yep.
Awesome. Did we cover all the topics here? I'm not sure if we had, or rather if you had anything you wanted to bring up. I know you already did a video on Amazon on your Daniel Pronk YouTube channel. Anything noteworthy there?
It was a good report.
Amazon keeps slaying. Bezos pulling the strings behind the scene. Conspiracy or not.
Their cash flow is back up. They did what they said they were going to do, and the market rewarded them for it. So it was just a good report.
Yeah. I wonder if now is a good time to go back to that conversation we had bookmarked. I do see that we're hitting the hour mark here. How are you feeling about that, Daniel?
Sure.
All right. So, as many of you know, this is Stock Talk episode 42. We are in the swing of things now. We have been doing this for a while, and something we've liked to do more towards the end of shows, just get a little personal, get a little bit away from the stocks, and just take questions from the chat and our Discord. As many of you know, we have been building and operating Stock Unlock for almost 2 years now. It is a company we are both building and working for full time. Earlier on in the stream, for those of you who weren't here, someone asked us, hey, what's been going on in the business lately? Are you guys okay? We did cite that Daniel and I had been put under additional stress in the last month or so. So we are very happy being open. We are building in public, and building companies is pretty fun. We wouldn't be here if it wasn't for all of you supporting us. So thank you. Originally, there were 3 co-founders of Stock Unlock. I think if you go back to episode 8 or 11, I'm forgetting which one it was, you would actually see the 3rd original co-founder, Nick, who is with us. It does make me sad to announce that due to personal reasons, Nick decided to leave the company. This was something that was not fully expected, and decisions like this take a lot of thought and care. We have all 3 of us put a lot of sacrifice, blood, sweat, and tears into this company. So lots of emotions fly around. It was pretty amicable on Nick leaving. And that being said, there was definitely a lot of tasks and things that Daniel and I took over, as well as legal regulatory structure that we all learned about, just in terms of how shares work with co-founders leaving. That could be an entire hour-long episode on its own, but just wanted to be open with you all that that's what went down there. I can reassure you, we are okay. We are moving and looking forward, and actually looking to hire another engineer. So we all wish Nick the best. He definitely put a lot and is responsible for a lot of the code and software in Stock Unlock, which him and I have been leading on the tech side, Daniel on the product side. I'm not sure if you have anything to add there, Daniel, or if people have comments in the chat or want to learn more about it. We're happy to field any questions there.
Nope, that's just what happened.
Building businesses is hard. It's been a roller coaster, I'd say. I have cried, I have laughed, I have gotten angry, I have gotten happy. It really exposes all of your weaknesses, and has honestly been one of the most challenging but rewarding things I've ever done. This is not my first startup that I've left to start, but it is the first, dare I say, successful one where we have decent, well-retained customers. We're growing our revenue. We obviously have very big plans for this company. So as we like to say, just another chapter in the book, but no shortage of turbulent waters, to use a metaphor, I guess, over here.
Yeah, definitely. Yeah, no, that was a good summary.
All right. I am not actually seeing any more comments here. So if there is nothing else, Daniel, I don't know if you have anything else on your mind. I'm trying to get better at not saying we will end the stream and then for the next 8 to 10 minutes continuing to talk. So I have not said that yet. We're still going. Jake, are you the one developing the code for Stock Unlock now? Yes, I am the one and only line of defense right now. I am fixing bugs. I'm on tech support. I am building brokerage account linking. I am working with new partners and vendors. Daniel is also hustling. I think it takes obviously an equal amount of effort outside of the code to build all the features, drive a lot of the direction, and continue to have a distribution pipeline so we could actually sell. It has been a lot. It's been a lot. I am a huge coding nerd. I love coding, as many of you can tell. But yeah, it's an immense amount of work. And unfortunately, we have a huge backlog of work that we have not been able to get to. And we definitely have had to make sacrifices, as you guys have seen with us missing the newsletter this month, as to what are the few things we can execute on and get done, knowing that we just don't have the resources to do all the things we really want to, which is why I'm super excited and have been mentioning that we are interviewing for and looking to hire a senior engineer. This is a really big deal for us. We are starting to get the cash flows now where this makes sense for our business to make some investments in catching up and being able to continue to deliver features at the pace that we were before. There's no shortage of things we want to do and build here. I know Daniel has queued up way too many designs that we have not been able to get to yet there. So yeah, stay tuned, and we appreciate everyone's patience as we go through this business restructuring per se.
Shane says, hope you come to Vancouver for a meet and greet. Yeah, so there was a meet and greet in Canada, in Vancouver actually, but I missed it. Then there was one in Calgary that I missed because I was in Vancouver. But then I made it to the Toronto one. And if anyone here is from the Toronto meetup. That was a great time. I met a lot of people. It was fun meeting you in person.
Tell us more about that, actually, because you went. It was a YouTube meetup in Canada, correct?
Yeah, it was a Canadian finance YouTuber meetup in Toronto. We rented out the rec room, which was crazy. And so initially we were selling 250 tickets. It sold out. We upped it to 300. It sold out. And then I think the day of, they upped it to 400 because there was still so much demand, and we sold out again. So I believe the final count was around 400 people came, and it was a good time.
That's a lot of people.
It was a lot of people, man. There was a lot of people there.
And I know you don't like saying this, but for those of you who don't know who Daniel Cronk is, check out his YouTube page. This is the #1 Canadian investing YouTuber. That is a great feat. And I think a lot of people, which was really gratifying, Daniel, were there to see you. There were a lot of Stock Unlock fans there as well. So if you were there and talking about Stock Unlock, thank you. That's what helps us grow. And something that I thought was really cool that I called out, and it seems that it was, obviously true. The world isn't crawling with YouTubers or YouTubers that have an account size like yours. So being around other people who are familiar with the blood, sweat, and tears that goes into building a YouTube page and the unique things that all of you face that most people like myself have not been experienced with, since we are not running big YouTube channels. How cool is it to be able to just interact and kind of bounce ideas off of, those like few people in the world that really can kind of see things through your eyes when you probably, deal with people like me, where it's like, Jake, you don't effing know.
No, it was cool. The way I worded it was nice to finally be able to relate to people, because it truly is just a unique thing. It's a unique job. It's usually quite lonely. And yeah, we when we landed there before the event, we had a barbecue, and it was all just the YouTubers meeting up and just like hanging out and meeting each other. And it was a freaking good time. We were just having beers, having burgers, playing spike ball. And yeah, dude, it was so much fun getting to meet everyone. And what was cool was I can genuinely say that all of the big Canadian finance YouTubers are just good people. Like, there was no drama, there was no egos. It was just like, let's hang out and just have a good time. And everyone got along. Like, I feel like they're going to be lifelong friends now. It was that good. So yeah, it was a great time, man. It was a really good trip.
So when's the next one? It sounds like this is going to be a yearly thing. Also, shout out to Samuel Batista in the chat. Thank you. I think you said that you were at this event. Let me know if I'm
no, I wish they could have been there. There was definitely people there helping out Stock Unlock, though. Like, people came up to me and were like, I'm telling everyone here to join Stock Unlock, which was sweet.
Yeah, some of those stories were absolutely incredible. Hopefully some of those other YouTubers start using Stock Unlock more. If people in the chat are watching other YouTubers or tune into other channels, which I hope you do, drop some comments and let them know to check out Stock Unlock. We really believe that we could help bolster their content, make it easier for them to do investing research, and dare I say, save their time. So yeah, it really helps us grow.
Yeah, it was fun. I would do it again. I would definitely do it again.
Awesome. All right, I am looking at these comments here. Any of them sticking out to you?
Nope.
Oh, I'll take this. This is a great comment. Jake, if you can work from home, why the F do you live in New York City? Great question. Light background for anyone that doesn't know. New York City is not the cheapest place to live by any extent of the imagination. Background context, I have actually lived in New York City for several years now. I was working in New York City for a while, and leaving my job to start Stock Unlock was never a pre-planned thing. It just kind of happened. I also have a lovely girlfriend and partner that I live with who does have a job in the city, so we are able to split rent. Basically, a lot of my life is here. A lot of my friends are here, and I have been stationed up here. And due to where I'm at financially and jobs I've worked at in the past, it is something that I can comfortably live with. I actually probably spend a lot less than people might think. Again, we split a 1-bedroom apartment, which lowers our rent, and I don't buy new clothes. I don't really go out to eat that much. I spend a lot of my time coding, so it works out. But I will be honest, I definitely feel the burn of the taxes and the price of a lot of things in New York City. Long term, where am I going to end up? I have no idea, but very, very fair criticism. Grape jelly.
I will probably be in New York once more this year, hey?
Oh, yeah. It is so hard not to drop what is happening there. Okay. Teaser. I need to be very careful with how I word this. There are very, very big announcements coming for Stock Unlock that involve pretty well-known partners in the industry that we may or may not be getting close to work with in an official partnership capacity. I understand that's vague, but what it means for us is more growth prospects, a lot of badges of honor per se, of just being recognized by some existing really big players there. So let your mind speculate. I am biting my tongue actually, because with contracts and everything, we do need to keep some things confidential. However, as time goes on and as we do more episodes, stay tuned. And we have a lot of exciting announcements coming up. Oh,
Yeah,
it's so hard not to say.
I know people will know in about 2 months. Should we do a New York meetup?
There's a lot of people asking for a New York meetup.
I think we have a lot of fans there.
I live in New York.
Yeah.
Wow. Yeah, in the chat, if you live in New York and would be interested in some type of Stock Unlock meetup around New York City, let us know. I think some of our apprehensions are just Daniel and I have a really high quality bar and really want to make sure that if people are traveling this and coming out, that it's actually worthwhile to come to, or if it's just more of a chill thing, just being very explicit about like what it is or isn't. So
yeah, we were lightly planning a Calgary meetup when Jake was in town, but then we got messages from people saying that they were going to be driving from like Kelowna, which is a 7-hour drive. And then the meetup was basically going to be like, okay, let's just meet at this bar or pub, or just go to this field, like downtown somewhere at a park, and just talk to people. So people were going to drive 7 hours for that. So then it kind of got to the point where it was like, if people are going to be spending that much time driving to meet us, we should probably put in more effort and make it like a good experience. So we canceled it, and we're going to do better next time, now that we know people will travel.
So, on a low budget, yeah.
Yeah. On a low budget, key there. Cash flow is everything.
This might be a very fun off-topic thing to talk about, Daniel, because you're in the sphere of people that could actually do this, even though I know you never would, because you have very good morals. So Roberto is saying, did you join the riots? So I'm going to just assume what Roberto's talking about here. I'm forgetting the name. I think it was like Kai Ken or something. There was someone on Twitch and YouTube who has like 10 million subscribers, and they announced in New York, like, hey, free like PlayStation, Xbox gaming chair giveaway, like be there at X time. And unfortunately, this person is now being charged with inciting a riot. I'm not one to really watch the news, but did see a couple videos on this. Union Square, there were people stopping traffic. I think there were around 64 arrests, 30 of them were minors, and this person just caused absolute monkey behavior mayhem. I don't know if you heard about this, Daniel, or if you have opinions on people with large followings, maybe such as yourself, telling everyone to go like just meet at a place for free giveaways. Any thoughts running through your head on this, or is this just all craziness for you?
It's not something I would do.
Fair enough. Saying, well, it's worth looking into. No, I did not participate in the riots. I have a lot more to do than go do things like that respectfully. But
yeah,
it was close by. I mean, I live about 14 blocks away from there. So
yeah, definitely does not sound like a productive use of your time.
All right. I think I'm going to bring us to a close here. We are very off the deep end away from what we normally talk about. If you are just joining at the end and wondering what the hell is going on, normally we're talking about stocks, investing research. Of course, Daniel and I are two of the co-founders of Stock Unlock, and we build investment education and analysis tools that we find are ignored by brokerages like Robinhood and honestly brokerages at large. Keep an eye out for brokerage account linking. That is dropping tomorrow. So you won't have to use your Robinhood account anymore, for example. You can just go into Stock Unlock and model it there. And I promise you, we have a 10x experience on the analysis. Just be very clear, you would still be executing and going to trade with your brokerage platforms. Daniel, any final words here before I hit the end broadcast button? This has been a fantastic episode 42. Feeling good.
Nope. Just thanks everyone for tuning in. Hope to see you again next week.
Yeah, I see Rajesh in here, ISO, Roberto, Whale, Samuel. I'm missing a lot of names. Thank you so much.
Do we support M1 Finance?
I don't have all of them memorized, so let me look.
Trash.
I think M1 is going to come later this year, but I appreciate that. Drop your brokerages actually in the chat. We'll probably end the stream, but I might stay in the chat just to answer them. The good news is the company that we are partnering with, that we did a lot of vetting on, obviously from a security standpoint, blah, 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 to bring you these connections. They are constantly adding more. So for example, Questrade, Interactive Brokerages, TD Canada, a lot of others, our support's going to be dropping soon after we do the initial launch, and we do support dozens of many popular trading platforms. I think US customers might be covered slightly better than Canadian, at least for the next couple of months. But before the end of the year, we are going to be getting all the big ones. And I've actually been shocked, Daniel, the amount of brokerage platforms that exist that I have never even heard of before. There are so many, like 50 to 100. I had no idea how many brokerage companies there were out there. It makes me feel very confident on our niche of supplying all the tools that brokerages do not, because it seems that there are more than enough opportunity and products already on the market to just execute a quick free trade. But again, they're not giving the tools that people need to make informed investment decisions, which, shameless plug, brings us back to why we are building Stock Unlock.
Yeah. I believe we have National Bank, right?
National Bank is another one that is coming up. So that's going to be supported later this year.
Yeah, we're also working on TD Bank in Canada, which is who I use, which is great because, I can't even link my account, which is so annoying, but they're working on it. It's going to happen.
If you are on TD in the United States, I want to be very clear, you will be able to link. I have a brokerage account with TD, and TD is available. Oh, I'm so excited for that. I am so excited. I'm going to code like one of the last features tonight, put together the comms, and we're going to blast that out. I have my entire day sectioned off just to re-give people free trials who want to retry out the site. I know a lot of you have been patiently waiting for this, and dare I say, have not actually become paying customers yet because this was a required feature. So hopefully this helps push the dial for a lot of you who have been on the fence. And of course, we would be honored to earn your business.
Yeah, it's going to be great. I cannot wait.
All right.
All right.
Well, thank you for hanging out with us on this lovely Sunday. This has been Stock Talk episode 42. If you are watching the recording on Spotify, please leave us a review. If you are watching on YouTube, hit that thumbs up, leave a comment for us, let us know how we're doing, and we'll see you all next week.
Yeah, if you're watching on YouTube, we have 90 people watching right now, so there should be at least 90 likes.
Please like our show. All right. I'm going to save us
kidding.
from embarrassment and hit the send broadcast button. Goodbye, everybody.
Bye, everyone.